Hello, Amsterdam. How are we doing?
I think we can do more than that. Hello, Amsterdam. How are we doing? There we go.
Not too bad.
It's a bull market. Come on.
We're going to do a presentation today on the rise of the Bitcoin ETFs. Is it going to come up on the screen in front?
No.
No. There we go.
There we go.
So, Peter, could you just tell us a bit about yourself, who Jacobi Asset Management are for the audience who might not be aware?
Yeah, sure. So I'm Peter Lane. Firstly, thank you to Bitcoin Inc. for inviting me, and Bitcoin Conference is the best conference sequence in the world, I think. But yeah, Bitcoin ETFs, the rise of the Bitcoin ETF has been absolutely astronomical. So I co-founded Jacobi sort of late 2020. We incorporated and made our application to our regulator for a Bitcoin ETF early 2021. We basically are, TradFi people thinking that Bitcoin is going to take over. So how do we bring that into the mass market? Because I fully believe mass market participation needs ease of access. So we thought a Bitcoin ETF is the most simple way for the people who aren't tech-savvy, crypto-native Bitcoin investors to access the underlying asset class that we saw as the most exciting and compelling investment to possibly buy within any sort of portfolio. So we built the company specifically to try and create access into Bitcoin for people that are unable to do it via their own wallets, crypto exchanges, etc.
Yeah.
And want to do it via products that they're familiar with. They've got their existing assets already in. So an ETF was the natural selection, and since we started, I think there wasn't any Bitcoin ETFs in the world when we started. Then the Canadians went first, and they did a great job. And then there's been a few popping up around the world. And then earlier this year, the Americans decided that it was happening, and they've just. I believe that's the absolute tipping point. So I've not seen a single shitty journalist say, "Oh, it's a Ponzi scheme or a scam," since, because. What are you going to do? Go and argue that with Larry Fink? I don't think so. So, we are fully into crypto. We think Bitcoin is going to be the best asset class that you could buy, probably for our lifetime. And so an ETF for us made sense to bring that to the rest of the world.
Thank you. So just to put some context of where Bitcoin is against other assets by market cap, Bitcoin's sitting around $1 trillion, just above. It took this 1 trillion in February, just after the ETF launch in January. So these ETFs have given it that kind of recognition of it's around 1 trillion. And we see it against the S&P, gold, global bonds, that it's such a tiny fragment of global assets, which are around 1 quadrillion. So it shows how early we are compared to major assets around the world.
Yeah, and I think that, if you look at that chart, just imagine like a percent of bond market goes into Bitcoin, or a percent of the S&P 500 goes into Bitcoin or Bitcoin ETFs. We've got such a long way to go, and I don't think it'll be an awfully long period of time until the blue bar is really knocking on the door of the gold bar to see
15x.
Yeah,
15x.
You don't need an awful lot of global assets to then say, okay, well, we're going to switch into Bitcoin now for that to become that. And I can see that happening within a decade. So
I know you touched upon this briefly, but just to tell the audience again, what are ETFs and why do they matter so much to Bitcoin?
Yeah, so an ETF is like any stock that's listed on a stock exchange, but instead of you buying, a Tesla stock or an Apple stock, you buy into a company that's a fund, and that fund then does, with your money that you put into it, it goes and buys Bitcoin. So within our ETF, somebody would pay in with, their brokerage account or their trading platform or whatever they want to use. They would then click buy Bitcoin ETF, and then we would then go and buy the actual Bitcoin. We would then store it with a custodian. So it trades then on an exchange. So any usual financial product, like let's say, for instance, I'll use the UK because that's where I'm from and that's the market we operate in most. Most people have pensions, tax-efficient savings accounts, and you can't hold Bitcoin directly in those products. Mm-hmm. So most of your assets generally are tied up in those assets.
Real estate.
So if you want to buy Bitcoin, you'd have to do it with new net money, which isn't really going to make a dent because most of your money is tied up in investment products. So in order to access Bitcoin or the underlying performance of Bitcoin, you need a product that's able to be accessible via these products you already have your assets and your capital in. So, you know, if you can, you know, take your pension pot, for instance, and most people have got, you know, all their people's assets are in their house, pensions, or, you know, tax-efficient savings products.
Like an ISA.
And you can use that capital to access Bitcoin. That's a way bigger pool of capital that can come into Bitcoin, and you can't hold direct Bitcoin into it until regulators start to say, actually, we're okay with direct ownership of Bitcoin within these products because we've got custodians, like BNY Mellon just recently got looked at, to hold your Bitcoin. So until that's the case, an ETF is the gateway for these such products to hold a Bitcoin product and therefore benefit from the underlying asset class without the direct ownership and the legal and the regulatory complications that, you know, the regulators will throw in your way.
So this is just a diagram, obviously, of the map of the world and where Bitcoin ETPs are located. So we've got about 9 jurisdictions. So Peter, do you want to talk quickly about the 9 jurisdictions or any of significance, really?
So I think we're getting quite good coverage now, really. So if you look, most time zones, the major time zones across the world are starting to get covered. So initially, the Canadians were first to approve it, then I think Brazil. We then saw the Australians listed, and they had an absolute catastrophe because the listing date was the same day as the Terra Luna issue, so it couldn't have got any worse for them. There's a few exchange-traded notes and other products in the European market, which is, you know, great because it's given access, especially in Germany and Switzerland. Unfortunately, the UK regulator is banning crypto for retail investors, which is really just stifling everything. And it's so political, it seems, that I can't see. You know, the UK government's in a pretty shit state, so I'm not sure where crypto is for them on the priority of things to sort out. So I'm a bit concerned about that, but the rest of the world, major markets are starting to open up to it. As you can see, Hong Kong is a great gateway for China to get into it, and anyone in that kind of time zone over in the Far East and the Australian time zones can now get in on a trading platform which is suitable for them. I can see...
and the UAE we'd expect.
I think from conversations we're having with other asset managers around the world that want to get into this, I think South Africa is a pretty good place, and the UAE. And then I think if you look at the map then, you'll have most time zones and most markets pretty much covered. So that will start to allow ease of access for most of the world. I think Japan needs to make a bit of a move because they're a crypto-friendly, you know, group of people, but they're not really allowed to buy crypto products at the moment on, you know, traditional finance platforms. But yeah, we're getting some good coverage, I think.
So we've looked at the worldwide spot ETPs, and we just wanted to see assets under management that the US that launched in January have absolutely blown away all other countries around the world. Was this something that you expected? I was extremely bullish going into Q4 and obviously Q1 of this year that the US is the financial capital of the world. And that's where you'd expect the dominant ETPs to be.
Yeah, totally. I feel like the crypto world is two worlds. There's America, then the rest of the world. And as soon as the Americans listed in January, that was a huge tipping point for the rest of the world will, you know, see that. The rest of the world will now think, okay, you know, the biggest market in the world's doing it. You've got BlackRock and Fidelity, the biggest asset managers in the world doing it. There's just no going back from that. So it's just then a case of the rest of the world's regulators and asset managers need to say, all right, how do we create a product and bring it to market? To try and do, you know, something like the Americans have done. And I think one of the key things is retail access, because at the minute, a lot of access from retail is what's driving the inflows. When institutional adoption starts, then, you know, the whole world will just, you know, the flows from the whole world will start to go, and that's when we know we're here.
So again, understanding that the US ETFs have dominated, let's put it into perspective against traditional asset ETFs since launch. You've got examples of GLD or the JP Morgan Equity Premium ETF. They're the two, orange and yellow at the bottom. And you can see how dominant these Bitcoin ETFs have been. You've got the Triple Q Nasdaq 100 ETF, which actually launched in the 2000 tech boom as well. So it's absolutely obliterated all records. And that has been the most successful ETF launch of all time.
Yeah, it's just unheard of, really, isn't it? It'll probably never happen again. It's very unusual to see an asset class that just is created effectively. And so there was an absolute queue of ETF issues in America looking to launch, and there was clearly unbelievable demand. And so it just garnered so much attention that it was always going to just ruin everything that's ever gone before it. And we'll probably carry on to do so.
So for me, understanding Bitcoin was the digital gold narrative. So taking that digital gold narrative, and then we take IBIT, the BlackRock ETF, and compare it to GLD, just to see how GLD, which launched the gold ETF, which launched in the end of 2004, we can see in the chart with the black ETF holdings that actually for the first year it was quite stagnant. And then through 2004 all the way to 2011, through the global financial crisis, rates dropped, and it just continued to soar. So that's something that I'm expecting to see with these Bitcoin ETFs. They hold around 5% of the circulating supply, so as they get bigger, we'd expect the Bitcoin ETF market to grow. And then, I don't know if you can see the two quotes from the Financial Times article, which was a 2004 article just before launch. And it talks about the first types of commodity ETFs to be backed, so which was GLD. And then the second quote on the article is talking about how the hedge funds and traders were taking futures positions, rallying when gold made a 16-year high, so which was a similar occurrence in Q4 2023, where we're going to look that the futures market was actually front-running a lot of this.
Yeah, and I think there's been a lot of noise made about the similarities with gold and when that launched and what it did to the price. And I think it's probably the only relevant comparison that we've got, given that the comparison of gold and Bitcoin is kind of well aligned, apart from one you have to dig out the ground and the other one you have to mine electronically. But I imagine that once gold ETF adoption, I think that will be mirrored. And I think the more that we've seen great adoption in America, but I think a lot of the American market still probably can't access. So Vanguard obviously don't give access to it. There's RIAs that would want to see a more longer track record before they allow their clients to get into it. So I think even though there was an absolute boom at the beginning, then a bit of a lull, I think that's probably normal, because with the gold ETFs, when they launched, it took a little while for that to then really, really ramp up. And I think we'll probably see a turbocharged version of that, but I'd expect that's going to be the way it's going to be followed.
Yeah, after the first 13F filing for GLD, there was around 115 institutions that held it. The first quarter for IBIT was about 414. So again, all records, it blows out the water.
Yeah.
Just a visualization of the Bitcoin holdings with other major Bitcoin holders, publicly traded miners, MicroStrategy that's just overtaken Grayscale. But as I said, they hold over 5% of the circulating supply in like a 9-10 month period, which is just insane, really. But the interesting thing was obviously Grayscale converted from a trust to an ETF. They had around 600,000 Bitcoin. They now hold 235,000 below MicroStrategy. But I think if you total them up, the newborn 9 and Grayscale, it's like a 800 and something thousand. It's just insane.
Yeah, unbelievable. And I think this goes to show that ETFs are important, because everybody that bought a Bitcoin ETF in America could have bought Bitcoin before, but it just shows that most people's assets are in products whereby you can't hold Bitcoin. So when that market got opened up and the 401ks were allowed to buy it, and your trading account with Morgan Stanley or whoever you got it with would you allow you to buy it, then people really, really dived in. And I think that's the familiarity that investors then see in that makes it a lot easier for them to go and access it, which is why these numbers are just absolutely ludicrous.
Did they blow away your expectations? Yeah.
I don't think so. I expected them to absolutely smash it, to be honest. And as forward-thinking as the American investor population, they've got the most advanced asset management businesses in the world. I feel like they were always going to do this. And I think it was just a matter of time. And I think the demand, America's a crypto, loving place. I think if you look at adoption rates globally, they're up there fairly high. Most people, people in this room are in the 1% of tech-savvy, crypto investors. The most of the world have got no idea what to do. And from my experience, so before I got into this, I was working in wealth management and financial planning for a decade or so. So I know what normal investors are like, and they've got absolutely no idea. So once these products are made available, the people with no idea can now get in. And they're the majority. So I kind of wasn't really surprised that, especially the likes of BlackRock, because, how much trust do you really need to have in BlackRock? I mean, everyone knows BlackRock. There's no counterparty risk, really. They're the biggest thing in asset management. And if you've got Larry Fink going on primetime business news saying, this is what I think is going to happen, people are going to listen. And I think that's exactly what happened.
Couldn't agree more. So taking IBIT, the BlackRock ETF. So Peter, do you want to go through the left-hand chart?
Yes, I think the left-hand chart is the biggest holders. And what you see on this is a lot of hedge funds that use it for the basis trade. You see some of the authorized participants, which would hold a stock because they're the people that are buying and selling it. And then you've got the Wisconsin Pension Fund, which is probably the most advanced thinking pension fund trustee board in the world, because they've gone all in. Not all in, but they've been straight out the bat. They've put it into the Wisconsin Pension Fund. That is money that... if that came into our ETF, you'd be like, great, that is that's here for 10 years at least. A lot of the basis trade plays and the market makers and the authorized participants holdings, that's going to come and go. But if you start getting, pension funds dropping in, hundreds of millions of dollars into a Bitcoin ETF, that is going to be there for years and years and years. Yeah. That's exactly the sort of client I imagine IBIT are trying to get into the pension fund, and I think they'll probably carry on doing that. And all the big pension schemes, like the firefighters' pension schemes, the teachers' pension schemes, the state government schemes, those are the ones with absolutely stacks of money. Yeah. And those are the ones you want to make a 2 or 3% allocation to your Bitcoin ETF, because that's going to be there for decades.
Yeah, I was speaking to someone. They said there's only about 7-8 pension funds in America that can actually are in a financially stable position to actually go and speculate in Bitcoin and hold it for the long-term position.
Yeah.
And then just the right-hand chart is just to show how IBIT has actually evolved. It's only till from January to May, but it is a retail-driven ETF. But we can see IBIT against the JP Morgan ETF, that the trade size is actually increasing. And the number of trades is going down. So yeah, it's still retail, but I think, again, over time, we'll see more institutional money coming in. I put this slide in. I just did an analysis a week ago or so, and it's just trying to understand where all these products kind of fit into the market. So you've got, again, IBIT, the BlackRock ETF, against MicroStrategy. And we obviously understand that MicroStrategy is like this leveraged Bitcoin play. So when Bitcoin goes up on a day, MicroStrategy does huge outsized returns. But on the down days when Bitcoin goes down, again, IBIT follows suit, but MicroStrategy actually outperforms on the down days. So it's just trying to find where all these financial assets sit within the Bitcoin ecosystem. I think MicroStrategy is up about 7 times what IBIT is this year. So it's just trying to find clues how the market perceives each financial instrument and see where we're going to head with this, really.
Yeah, interesting analysis you did. I think people are seeing MicroStrategy as a leverage play, aren't they? Mm-hmm. So I think the other thing about MicroStrategy is, in the UK, if you're a retail investor, I think you even mentioned it, within your...
YOLO, my whole pension in MicroStrategy.
Yeah. So you can't buy my Bitcoin ETF, but you can buy MicroStrategy in your Hargreaves Lansdown SIP. So they got probably more access, well, definitely more access for people to buy into it
to that
than Bitcoin ETFs. So it's an amazing thing that Saylor's doing. I think he's kind of found a glitch in the financial system to maybe make himself the richest guy in the world.
And then it's trying to understand the behavior of the ETF buyer. So we've got the cost basis of the ETFs. So we've taken the 3 largest asset managers. So that's BlackRock, Grayscale, and Fidelity. The deposit cost basis is around 54,000 to 59,000. So they're in the green currently, give or take where Bitcoin is now. And you can see that the price has actually used the deposit cost basis as support. for the past few months. And obviously, Bitcoin goes through these 20, 30% bull market corrections, which is quite a usual thing. But it's just interesting to see that these are just, I believe these are passive flows. So like when we had the yen carry trade unwind August 5th, 6th, IBIT registered no outflows. IBIT's only seen 4 days of outflows. So that would tell me that this is kind of being treated as like an S&P 500 play, that every month, or getting pension, that they're just allocating bit by bit and not really selling because they don't see it as a short-term play.
Yeah, totally. I think that sort of screams retail investors too, because institutional traders would be in and out all day long, but a retail investor that doesn't quite have the capabilities to do that would just buy it. And I think this is an exact example of financial products that you've had for a long time that now have access to it, that you just make a part, or you make Bitcoin ETFs part of your allocation model. And if you're thinking about, let's say, a UK pension scheme, you would pay into it on a monthly basis. Let's say, I know easy numbers, you put £500 a month into it, you might have an allocation of 100 of that goes into Bitcoin. So every single month, you'd be buying more and more and more, which I think is the way that people will start to build up real holdings in this, because they can access it via products they have to save money into.
And then just to show everyone that the ETFs, they're amazing, and you said earlier that they get so much media attention, but they're actually such a small part of the market. So the ETF trade volume pretty much on any given day is around $1 billion. The spot market's around 5 to 6 billion, and then you've got the futures volume that can trade anywhere between 30 to 60 billion. So it's a really, really small percentage. So when we see these 100 million, 200 million inflow days, and people are like, why is the price not moving? It's pretty much that. It's such a small part of the market. And again, as adoption grows, we would expect it to be a larger and larger market share of the total aggregate market of Bitcoin.
Yeah, I think this is a really positive chart, actually. I think what Bitcoin's ETFs did is two things, intangible and intangible, right? So tangible, people can now come in and access it. And the intangible stuff is that it's a movement now, like it's a complete traditional finance is moving into it. So what I think I mentioned earlier, you don't see journalists now saying it's a Ponzi scheme or a scam, because go and try and win that argument with the best investment management companies in the world. And I think that has driven the media to then switch their focus away from it. And a lot of retail investors especially would read the news and believe it. So if you have journalists that don't really know what they're talking about, just looking for headlines, well, that headline can't really now be, it doesn't work, and it's going to, it's going to crash, it's going to go to zero. I mean, that argument's completely eradicated.
The left tail risk is gone. Yeah,
and I think largely because you try and make that argument now when there's the most successful ETF launches in history are Bitcoin ones. So that narrative is completely gone. That's moved away, and I think that now can allow for a new narrative, a new level of education to come into the investors. They'll carry on buying, and I think the ETF intangible factor in that is that we've got rid of the negative noise, and actual education can now come in. So the Ethereum ETFs haven't done anywhere near as good as Bitcoin. I was expecting a boo. Yeah, or a cheer. $500 million worth of net outflows, but there's obviously reasons. Maybe the appetite isn't there, you don't get any of the staking for it, but what we're seeing is that Ripple and other tokens essentially are getting these ETFs, but again, the free market will determine what they want. Yeah, it will, and I think the free market will decide, and I think the ETH ETFs have got, they were never going to do what the Bitcoin ETFs. It's like getting me and you to race Usain Bolt. We're never going to beat him, but we might be quite quick against the usual ETFs. So I think if you look in the top performing, the top flows into ETFs in America this year, there's some ETH ETFs ones still in there. So versus real not real life, but traditional ETFs, they've still absolutely smashed it, but they just can't come anywhere near the Bitcoin flows because it's not Bitcoin, right? And then alluding to what you said earlier about the basis trade, which is like longing the ETF and shorting the futures market and gaining that little arbitrage, that's I would say the majority of the inflows. Again, Wisconsin is that spot hold where the APs are holding on to it. So in October 2023, for me, I flipped extremely bullish. The CME, the regulated exchange, became the #1 futures exchange, overtaking Binance, which is more of a retail exchange.
And if we go back to that FT article of GLD, the futures market kind of front ran the gold price. This is exactly what happened pretty much, gearing up to launch.
Yeah. The 1 minute clock's flashing now, so I reckon we go to the next one.
Yeah. And then IBIT has now got options, which is absolutely massive. For retail investors, they can make passive income through like cover calls.
Yeah.
Miners can hedge. So it kind of unlocks this whole new world for all these.
Yeah, it's another step towards it just becoming a normal asset, right? All other asset classes, all other stuff you can do these things on. So an ETF now gives financial investors a tool to be able to use it to do other stuff other than just passively hold it.
Mm-hmm. And just lastly, your thoughts. The big one is obviously Bank of New York, Mellon, being allowed to custody. So
yeah, I think the big thing about financial products having assets, Bitcoin as the underlying asset, it does create ease of access. And for Bitcoin to fulfill its potential of, maybe a currency one day, it needs to be less volatile. To be less volatile, it needs mass adoption. Mass adoption then requires ease of access. And as I said before, 99% of investors have got no idea what they're actually doing. People in this room know way more than people outside of this room will ever know. And so to have products that people that don't know what they're doing, to allow them to get into Bitcoin is the ease of access key that the industry needs. So without that, it will carry on just being people like us in this room that want to buy it. But we need everyone for Bitcoin to fulfill its potential.
Perfect. Thank you, Peter.
So yeah, thank you very much. I hope you enjoy the rest of your day.
Going to do a selfie?
Yeah.
Go on.
Welcome back to the Bitcoin News Desk, everybody. We are here at Bitcoin Amsterdam 2024. I am Frank Corva, the host of the live desk here, the political correspondent and business correspondent for Bitcoin Magazine, joined by Susie Violet Ward, Bitcoin journalist and co-founder and director of the Bitcoin Policy UK Institute, Roger Huang, author of Would Mao Hold Bitcoin, as well as a contributor to Bitcoin Magazine and Forbes, as well as Mogashni Naidu, UX researcher at the Bitcoin Design Foundation. Mogashni, I want to kick it over to you first. What has been your biggest takeaway from this event thus far?
This technology that we're building, it's not just technology. It actually has the potential to dramatically improve people's lives all the way across the world, from activists to everyone. It's reachable technology, and it is technology that is creating hope. Let's go.
I like that. Woo! Roger, what is your biggest takeaway thus far?
Yeah, I love the energy here in Europe. I was in London doing a Bitcoin event as well, and seeing all the people here that are just so interested in Bitcoin or so passionate about the topic. It's just been great to see, and love to see the energy.
Love that. We love the energy from you, Roger, so thank you. Susie Violet Ward, what haven't you done at this event so far? You've been all over the place, but on a serious note, what is your biggest takeaway from the event?
I love the fact that we're discussing the freedom technology. And of course, that is the most important part of Bitcoin for me. And the Bitcoin mining in 2050, we're talking about Bitcoin as if it's inevitable. I think it obviously is.
I love that.
Yep. And just how Bitcoin miners in the Bitcoin space has to innovate. They're always the leaders.
They are very creative, right? We've heard a lot of creative solutions using like the wasted heat as energy to do other things.
Yeah.
Really cool stuff. Mo, I would like to kick it back to you. You do really important work in coming up with really good design for people who are using this in a variety of different contexts. And you focus a lot on people's stories as a way to influence and to inform the design decisions that you make. Can you tell us a little bit more about that?
In order to be able to build this technology with real use cases, we have to understand the people behind the applications we're building. We have to build a set of very specific use cases, which we can then share with the entire ecosystem. I am really trying to drive this role in the ecosystem to build products for real people. To do that, we need to sit across the table with them, we need to speak with them, and then we need to feed that information back to the ecosystem. I'd love for everyone to be involved in this, because I do believe we can do this together.
Yeah. And you're building for people across the world. Speaking of international or across the world, we have, again, the author of Would Mao Hold Bitcoin. Roger, you write a lot about Bitcoin adoption in China, where Bitcoin isn't necessarily welcome. Can you tell us a little bit about that?
Yeah, I think it's been incredible to see the fact that Chinese people are so involved with Bitcoin, even though the Chinese state has been so against it. And you can see it even here in this conference, right? We have a lot of Chinese miners, businesses still involved in Bitcoin. So always inspirational to see that even though you have a state that's tried its hardest to try to get rid of Bitcoin from, and even try to attack the network, you can argue, with the mining kind of kicking out people from the provinces, that there are still so many Chinese people that are involved, whether they're buying Bitcoin, whether they're entrepreneurs, or whether they are investing.
Yeah, appreciate that. Susie, you're from the UK. You write a lot about what's happening with Bitcoin in the UK from a bunch of different perspectives. You've recently critiqued some of the BBC's coverage on Bitcoin. So while the BBC is obviously far from maybe the CCP, what can you tell us a little bit about maybe mainstream media coverage of Bitcoin and what it lacks?
I think there are signs that we're sleepwalking into an authoritarian government. And so I think that people look at China and they think, oh no, that could never happen to us. But I think not being able to challenge mainstream narratives and get articles retracted that are provably wrong, I think, is a clear sign.
Yeah, I think that's extremely important to note. So we're kicking it back to the main stage in a second. I just wanted to let you know once more again, we were here with Susie Violet Ward, Bitcoin journalist, co-founder and director of Bitcoin Policy UK, Roger Huang, author of Would Mao Hold Bitcoin, and Mogashini Naidu, UX researcher at the Bitcoin Design Foundation. Thank you all for joining us. We're taking it back to the main stage. We'll be back after this.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.